Hi everyone, Stefan and Tom here from Angel Advisory. Welcome to another installment of the Real Wealth Podcast. So today's topic we're looking at is basically it's based on demand. We've had a lot of inquiries lately, people asking about buying and owning property through super. So we want to answer some of the main questions that we've been getting lately. And to do that, Stefan Angelini, welcome.
Hi.
So this will be fun. I mean, I'm going to enjoy it, but you absolutely love property and you love super. So you're going to kick off. Before we get into the good stuff.
Such a dork.
Can you bang out the disclaimer and I'll start a timer. If you go over 10 seconds, I'm going to cut you.
Certainly can. Boring. Hello, everyone. Lovely to see you. Stefan Angelini here. Just wanted to let you know that everything you hear today is just general information only. Please don't consider it as personal advice. If you want any personal advice, please go and consult your licensed financial advisor. Boom.
That was pretty good. That was good. All right, cool. Now the fun stuff. So a lot of inquiries recently. I suppose we've got to start fairly broad because there are restrictions around owning property through super. And we want to introduce the concept of the SMSF, the Self-Managed Super Fund.
Yeah.
So do you want to explain how it works with owning property through super and how that ties in with SMSFs?
Cool. Well, let me take it right back. So what is super? How can you hold your super? So there's three main ways you can hold your super. One's an industry fund. So basically one of these where you're poured in with a whole lot of money. Another way is a retail fund. So a retail fund is where you've got more control of your money. You can control your investments. There's a whole lot of different platforms, more made for people with higher balances in super who want more control.
Yep.
And then there's a self-managed super fund where you've got ultimate control, ultimate discretion, but you are the trustee. So you are the person giving the information to the accountant, lodging the tax returns. You're the one that gets in trouble if something goes wrong. But it means that you can do a whole lot more trickier things like buy property through your super fund.
Yeah.
And that's why that's a self-managed super fund. It's the most complex. It's the most expensive to run. Or not really at the end of the day, because it's just like the accounting fees. Once you've got a higher balance, it's very low because it's more of a fixed cost to run it. But a self-managed super fund is great for people that want ultimate discretion over their super savings.
Yeah. So with the SMSF, there's a little bit more complexity to it, but the options that are available to you are much broader.
Yeah.
So we can put a line through owning property, owning direct property through retail and industry.
Yeah.
It's only available through SMSFs.
Yeah, cool. Doesn't mean you can't own property in other ways, but it's got to be through a manager or a fund manager. So a property fund, for example, where you own one of many, but there's a professional manager that gets paid for this. But if you want to own that direct asset at 123 Smith Street, I don't know if that's actually an address, but
it's got to be.
But yeah, you need to have it. If you want it in your super, have it in a self-managed super fund.
Yeah. And if you live at 123 Smith Street and you listen to this, we're not trying to buy your house. It's just an example.
No, property values just went up.
So in terms of the use of property, there's one box that needs to be ticked, which is the sole purpose test.
Yeah. So basically sole purpose test in super means that is it for the ultimate purpose of earning an income for your retirement benefit? So you've got to make sure that it's basically what that means is it an investment? Are you buying it for investment purposes?
And what that means in reality is if you're going down the path of buying property through your SMSF, you're not planning on living in it and you're not planning on holidaying in it.
That's it.
Because that doesn't meet the sole purpose test where we're aiming to build your superannuation balance for retirement. We're not buying your house.
Yeah, that's right. Eventually, if you want to get tricky about it, you can eventually pull the property out of your super fund.
Yes.
Down the track.
Yeah.
If you want to use it for your own purposes.
Yeah, you can. I don't think we have time for that. Look at your body language. You love property and SMSF.
I do.
So the next one is, and I think this has been happening, a question that we've been getting a lot is, can you use debt to buy property through the SMSF?
Yeah, you can. There's a certain structure of it that it's called limited recourse borrowing arrangement, so an LRBA. But basically, there's a few banks out there. There used to be a whole lot that will borrow money to your super funds, not to you, to your super fund, for the purposes of purchasing a property. In terms of like LVRs, loan to value ratios, you can borrow up to 80%. People don't think you can, but you can for resi. For commercial, a lot of the times it is a bit lower. And there's not many providers out there, which is why you're seeing interest rates that might be in the high sixes all the way up to 8 or 9% for a property in super fund. For property in a super fund. So interest rates are quite expensive now just because they're a specialized product.
So the answer to some of those questions, can you? It's yes.
Yep.
How? It's LRBA, limited recourse borrowing arrangement. And what are the effects on cost? It costs more.
Costs more.
Yeah.
Yeah. So you weigh up, all right, well, is it worth borrowing money to buy that property? Is there capital growth that I see there that's going to happen? What's the rental return looking like? Because obviously the rental return probably won't cover the interest cost if you're borrowing 80%. If rent returns at 3% and you're borrowing at 9%. So there's a bit of a differential there. So can you afford it? And that's part of like the assessment that we do. Can you afford to hold the property? And what if things go belly up?
Yeah.
What are you going to do?
Yeah. So I suppose the next thing to touch on is the structure and any other restrictions that there are on the debt.
So the structure is when it comes time for borrowing through your super, you need to set up a self-managed super fund, and then you need to set up what's called a corporate trustee. So you can have individual trustees, but instead of this, you need a corporate trustee where the members are the directors. Now you can have up to 6 members within a super fund, so 6 people can hold money in a super fund. Now, including that, this is called a limited recourse borrowing arrangement. So there's limited recourse, which means the lender can't go back and get all your assets. Which is why a lot of banks don't want to do it anymore. It's not worth it for them. But you've got to set up a separate thing called a bear trust, which sits within the SMSF, which is a separate structure that ends up borrowing the money. That creates the extra protection for your super fund. And that's, I guess, the complexity for the structure, that there is the corporate trustee and this bear trust that needs to get set up to own this asset. And what was your other question?
Are there any other restrictions on the debt?
Yeah. So when you use debt for a property purchase, there's restrictions on what you can do to the property. So in terms of renovations, so you can give it a lick of paint, you can do cosmetic things, but you can't go in there and change walls and do a development or put your own money into it to extend it. Becomes, there's a lot of rules around what you can do to it. So it's just really important to make sure you get the right advice, talk to all the right people if you're going down this track before you start trying to develop or add too much value to the property, because then you're in the game of almost like property development. And that's sort of like a no-no when you're borrowing money through super.
So that covers a lot of people wanting to buy property through the SMSF. What we want to look at now is existing property, something that's already owned. Can it be transferred from ownership perspective into the SMSF?
Yes, but no.
Okay.
Clear as mud.
Okay.
I've been using that saying so much lately. Clear as mud.
Yeah, I still don't know what it means. I hear it all the time.
Yeah. Also, what? So anyway, can you transfer property into your super fund if you own it? Residential properties, no, you cannot. If it's a business real property, so basically a commercial property that's rented out for business purposes, yes, you can. And when you do that, there is some implications around that. So if, let's say, you bought the property for $500,000 and then it's now worth $1 million, you need to transfer it in at market values to get a proper valuation. Because you can't be trying to trick the system. That's a no-no. That means that you will have capital gains because it's essentially a change of ownership. It's like you're selling it. So whatever structure you hold it in before you transfer it, that's a capital gain event. So make sure you're figuring out, what am I going to do given I've got this gain? It's going to impact me. Is it still worth it after doing that? And the second thing is the benefit is in a lot of states, because it's like the same beneficial ownership, they call it, you don't necessarily have to pay stamp duty. So if you think of stamp duty in Victoria, and think about it as being 0.55% of the sale price. So if it's $1 million, $55,000 would have to be the stamp duty cost. Because you are the person transferring it to your super fund, you're sort of like if you own it in a certain structure, then you won't have to pay stamp duty on it.
That's because it's your personal name to your SMSF.
Yeah. So it's got to make sure that if it's in family trusts, can't really happen. I don't think anyway. Go get some really good advice from someone smarter than me. But a lot of times when it's in your personal names, and it's possible, and you can get that stamp duty exemption as long as you tick a lot of the boxes under the regulators or the revenue departments. Certain framework that they work in.
Because in effect, it's not really a sale.
No,
transfer. So it makes sense. No stamp.
Yeah, that's right. But if you want to transfer it into then you got to get into the rules around super. How much money can I get in? So concessional contribution scenario and then non-concessional contributions. It's about ticking these boxes. So what's a tax deductible contribution? And then what's a not a tax deductible contribution? How much can I use? So if you've got a property worth $1 million and you're the only person in that super fund, you can't get $1 million property into a super fund just by transferring it.
Yeah.
So it needs to be another structure. And then you play off debt and things like that. So it becomes quite complex when you want to start transferring properties into super. But the reason people might want to do it is because eventually, taxes in super are quite low. So it can be quite tax beneficial to own property through a super fund.
Well, that leads us into final, but arguably most important, what happens when you sell? So we talked about the transfer of ownership in. What happens when the time does come to sell that property from your SMSF?
Also look at taxes, right? So you own it in your personal name, you get a 50% capital gains tax discount. If you've got it in your super fund, normally your super fund in accumulation has a 15% tax rate.
Yep.
But when you own an asset for longer than 12 months, you also get a discount in your super fund name.
Yep.
So you pay 10% tax on the sale.
Yep.
So think about it again. If you make $500,000, pay 10% tax. So you sell it for $1 million.
Yep.
$500,000 gain.
Yep.
Take off $50,000 for taxes. Your net benefit's $950,000.
Yep.
But certain rules in super that if you meet a condition of release, being you're over 60 years old, you've ceased employment, you're retired, or you're 65 or over, then your superannuation can become account-based pension under a certain level of assets. And therefore, the sale of that asset does not have any tax implications. So you sell it for $1 million, you've got a $500,000 gain, but the tax is zero. So you keep $1 million. And that's the main driving force behind it. If you're a believer that property is always going to increase.
Yeah.
And when I sell it, if I do need to sell it, because a lot of the times when you retire, you might need access to that $1 million that's sitting there just to fund your retirement because you're not earning an income anymore. And therefore, sell the asset, pay no tax on it, and you're in a really good position.
If you can hang on to it for that after you've met that condition of the lease.
Yeah. So that's why we love super, because it keeps your taxes low. If you don't need access to the property or the income from the property, then hold it through a tax effective structure. But it's just rules and regulations around it because it is quite tricky.
Yeah.
We're seeing a lot of people come and buy it just using cash in their super fund. So using multiple parties, bringing them together, building up the cash balance and saying, well, property's just taking a big hit. I want to use this as an opportunity to get in.
Yeah.
Especially because equity markets have come back so much since the start of the year. So
well, hopefully that's answered a few of the sort of broader questions. There's always going to be more, though. There's going to be more complexity and more questions that need to be answered when it comes to setting up the SMSF, buying the property, selling the property, etc.
Yeah.
Which we're on hand for. But it's a good start. It's answered a lot of questions, and I've just got to go throw a bucket of cold water on Stefan.
This space always changes. If you've got any questions about buying property through your super, how to do it, how do I get up to 6 members in a super fund to buy a property, or I've got a property that my business rents, I want to buy a property through my super fund and have my business rent it from there. I mean, we do this kind of stuff all the time. So if you've got those kinds of queries, reach out to hello@angeladvisory.com.au and we'll get one of our experts to have a chat. Thanks, Tommy.
Excellent. Thank you very much.
All right. Thanks for listening.
Cheers.
See you guys soon.
Bye.